We're gonna do this. This is how we start off our shows. Okay, we start off on the left side, and we go. Save. Build a. Sound money. All right. Save. Build a. Sound money. Save. Build a. Sound money. We're gonna do this. This is how we start off our shows. Okay, we start off on the left side, and we go. Save. Build a. Sound money. All right. Save. Build a. Sound money. Save. Build a. Sound money. We're gonna do this. This is how we start off our shows. Okay, we start off on the left side, and we go. Save. Build a. Sound money. All right. Save. Build a.
Hodl, save. Build a. Sound money. Hey, it's Ugly Old Goat here. It is, hey, we're starting right on time, 1 o'clock, just turned 1:01. We're getting better at this, Eddie. I need Eddie to get on here with me. And he said, well, maybe I will next week. He asked me, and I just tell him, my mind's in La La Land, and he's, down to earth. One thing about Eddie, you know exactly where he stands, and that's one thing I like about him. So there's no two faces about him. Now, he offends a lot of people because he's a little rough, but that's okay with me. I prefer that over two-facedness and dishonesty. Hey, I'm kind of finding my beans on how I want to do this show, and I'm getting more confidence on it. So I think I've got a pretty good lineup right now. I like this time slot because a lot of news seems to happen in the 2 or 3 hours before we come on, and so I can address it. And today, I'm going to start out with, of course, it's the 50th anniversary of when Nixon closed the gold window. Now, I was a participant in that. I was a commodity futures broker back then. I was, 50 years ago? I'd have been 24 years old. And, I was, at that time, I think that would have been 1974. 73 is when I became a commodities broker, and that's a good story in itself. My father gave me $5,000, and I ran it into $350,000 in about 6 weeks. Oh, I was so smart. I thought, boy, I knew everything. And by September, I was going to be a millionaire, and by the end of the year, I was going to retire. Of course, it didn't quite work out that way. By September, I'd given it all back in the market, which seems to be the story of 99% of traders, and that's why that's why I teach equity trading. But we're not going there. We're going to cover this news. I want to cover what this was about. Now, you got to remember, at the time, the dollar and gold were same. The dollar was set at a fixed exchange rate, and it was at that time it was $35 an ounce. Well, we had inflated the currency so much that could not be maintained. I think of the French. Now, during World War II, all the European nations sent their gold to the United States, and we were the gold reserve. And the French came over with some battleships and said, "Hey, here's your dollars, we want our gold." And of course, we didn't have enough gold for all their dollars, and so that's when Nixon closed the gold window. Nobody tells that part of the story, but that's what really happened if you go back and look at this thing. So now, and here are the lies that were told. He said that this was going to stabilize the dollar, and it would end. And the other thing, they were going to suspend temporarily convertibility into gold. And of course, what really happened is the only people that could redeem the dollar were the governments and central banks. In the United States, in the 30s, it actually confiscated gold, so United States citizens couldn't take dollars and redeem for gold, but any foreign government could. Of course, we exported inflation to such a point, they were demanding their gold, and of course, we didn't have enough, so that's when we closed the gold window. Now, what happened over time is they did restore convertibility, and actually even to citizens. And one thing that they did is they legalized gold. I think that was done in 1978, 77 or 78. That's when I got into the gold business, was when gold was legalized. And I actually minted gold coins, and I actually was the first one to decimalize the troy ounce I was first one to make a half ounce and quarter ounce and tenth of an ounce gold piece. We couldn't call them coins then; we called them gold pieces. But so what happened is, after they legalized gold, now you actually do, because you have a free-flowing currency, you now have convertibility. You could convert your dollars into gold, and so shortly after that happened, the gold market ran up to about $200. I think when it was legalized, it was about $200. The market sold off after it was legalized to about $100, and then it went up and up and up, and actually peaked out, I think, at about $800. It was just a one-day spike, but it did trade at $600 for a year or two. And then we went into this bear market from the late 1880s until 2000, when, and it was shortly, after the World Trade Center terrorist attack, then gold really took off, and the years from 2000 to 2011 were very, very bullish for gold. And then we've done very little since then, but we're going to talk about gold in a little bit. But I wanted to point this out because the dollar is convertible into gold now, freely convertible into gold. And that's why you have these markets. And there is a futures contract where you can actually take delivery, as opposed to Bitcoin, where, yes, they have ETS, yes, they have a futures contract, but they're cash settled, which in my estimation is not a true commodity market. It would be very easy to make Bitcoin deliverable, but they've deliberately chosen not to, because if they made it deliverable, then the Bitcoin market could actually be cornered, and unlike any other market, because it has no elasticity. There is no such thing as a stock to flow ratio. Gold has a very low stock to flow ratio. And now stock to flow is the amount of new production. Even if the price goes way up, new production is only a small part of the total supply. Well, Bitcoin's deflationary, and we have a fixed amount that goes into Bitcoin, and there's only, I think, 1,000 or 2,000 Bitcoin left to be, or not 1,000 or 2,000. There's 20 million Bitcoin out there, 21 million. I think there's about less than 2 million left to mine. So the stock to flow, in my mind, it's not an issue in Bitcoin. They make it a big issue, but it's a non-issue because Bitcoin doesn't have a stock to flow ratio. In fact, every year we lose Bitcoin. It disappears. It gets lost. People lose their keys, and it gets lost in other ways. So basically, the other thing too is that the gold standard does not keep governments from inflating. What it really is, it's like a canary in a coal mine. And what happens is when a government does inflate, then the reserves disappear, and they were going to totally disappear, even though they put all these restrictions on gold, so only central banks and foreign governments could redeem it. They'd inflated it so bad that they were going to lose all of the reserves, and so they closed the gold window. And then slowly they raised the price at a fixed rate, and then they let it go free floating, and then they legalized it in the United States. So now United States citizens could own gold again. Back in the 30s, FDR literally seized bank accounts, went into safety deposit boxes, and took anybody's gold that was there. You were required by law to turn your gold in. And at that time, it was valued at $20 an ounce. After they took your gold, it was worth $35 an ounce. They repegged the gold market. Now, to have sound money, and gold is sound money, and again, it doesn't prevent inflation, but what it does, it gives market signals when a government is inflating too much. Now, what's supposed to happen is when those gold reserves start disappearing, then the inflating stops because they've got to buy that gold back. But nobody likes to play that game. They like that free money that they get through inflation. Now, the problem that we've got is we've still got, well, I'm going to call it Bitcoin crony capitalism. It's true. We had gold and silver crony capitalism. If you go back and study the history of the silver market, the silver interests had a big influence in Congress when they were doing the gold standard. Basically, they pegged gold, so they wanted the government to mint so many silver coins and buy so much silver and make it into silver coins every year. And the government did it because what they could do is buy this silver way below face value, stamp $1, say, well, it's now worth $1, and voila! Now all of a sudden you've created wealth, at least nominally. Now, what happened was they created more silver dollars than what the marketplace needed. And so the United States government started storing all these silver bags. They had uncirculated bags of silver coins in the U.S. Treasury. And of course, instead of being valued for the silver content, they were valued at the gold standard. And they actually, these were so plentiful that in the 60s and 70s, they actually had a futures contract. I don't know if they still exist, but United States silver coin bags, and they weren't uncirculated; they were circulated, but their face value was the same. Circulated or not circulated, the face value was substantially higher than the intrinsic value. So. What we have is this history of monetary. Everybody is lobbying Washington to, have things the way they want it. And the same thing is going on today. And here's an article that NBC put on. Republicans claim betrayal as cryptocurrency backs Democrats. And this comes out of Jackson Hole, Wyoming. Now, Jackson Hole, Wyoming is one of the richest counties. Wyoming's one of the poor states in the nation, but that county is one of the richest ones. All the elites have their little bungalows up there. That's right next to Yellowstone Park, so it's a beautiful place to be, beautiful area, and this is also where the state of Wyoming is where a lot of cryptocurrency legislation is happening. Now, I don't have too much of a problem if different states want to do different things. I think states should have a Bitcoin reserve. The problem I have is when we nationalize it. And this is what you're seeing now. You have all these different PACs. Now, I don't know what they're doing with the Dems, but everybody wants to get on the crypto bandwagon. And Trump at that Bitcoin convention in Nashville, he announced that he wanted to create a Bitcoin reserve, at least with the Bitcoin that the United States government has confiscated. Now, at that same convention, I think Robert F. Kennedy was there, and he went a step farther. His Bitcoin crony capitalist said, well, we need to buy 1,000 Bitcoin every month for and build, not just take the Bitcoin we have, but we need to build a bigger reserve. So, this is all politics. This is, why this is contrary to everything what Bitcoin is about. But, this is what happens when greed comes into the market. Everybody's looking out after their own interests, and they want to use force and power to do it. We're going to force the government to make this a reserve. We're going to force the government to buy more Bitcoin. Or we're going to force the government to sell more Bitcoin. And so here's when we come to this part of the equation. Okay, the United States government moved 10,000 Bitcoin to Coinbase. At least it gives the appearance, hey, we're going to sell this reserve. Trump wants a reserve. The Democrats are in power. Well, we're going to sell it so he can't make it a reserve. This is just insane, guys. This is what keep politics out of Bitcoin. Nashville, I don't know who supported that conference you have, CoinDesk, or wherever you guys are, but you should be ashamed of yourself making a place for all this legislation and we need to regulate it this way, regulate it that way. Hey, E.C. Harwood wrote about the three greatest swindles of all time. The number one swindle of all time is inflation. That's money creation by governments. And it's still going on today, okay? Number two is entitlements. Started with Social Security, and now we have all these other entitlement programs. And the third thing is regulation. We just need a little bit regulation, and we need this kind of regulation because this will solve the problem for us. No, you know what? Free markets work. We saw it work. We saw how it worked in Bitcoin. Why do you want to interfere with that? Okay? Why now all of a sudden? Oh, we have to make it legacy. Oh, we'll give you special tax breaks if you do it this way. If you store it with our way and under our wallet. It doesn't matter what it is. This is the whole game, and that's the sickness that we have. That's until it's really more of a morality issue than anything else. And of course, I believe in our total depravity. We are, we are not good. Okay, there are no good people on this earth. We all want to be good. We all want to make ourselves look good, but we're not. I know I'm not, and I'm not going to fool anybody to think that I am. I've failed in so many ways, but that does not diminish the ideal. It does not diminish the ideal of those 10 commandments, and which can be summed up in 2. You love the Lord with all your heart and all your mind, and you love your neighbor as yourself, and everything else falls into place. All right, so let's. I'm done my rant, and I want to go here because I covered the idea that the idea of the government threatening to sell Bitcoin, and that was in direct response to President Trump's proclamation to make the Bitcoin we have in the strategic reserve, which that is a good idea. I mean, if they should have never confiscated it anyway, because property does not commit crimes; people do. But and if they did confiscate it, then they should. And it was obtained through criminal activity, then they need to look at the victims and distribute it back to the victims. But they're not going to do that. They don't really care about the victims. They only care about their own, power and greatness. So, but I wanted to bring this out because while we have these various signals and the technically Bitcoin looks like crap right now. There is something I think that is brewing, and I thought this was a good article. There's a bull signal flashes for the first time in nearly 2 years, and this is by a guy by the names of Jamie Coates. I've never followed him before, but I checked it out, and it's a pretty good article. Basically, he's arguing that we're reinflating again because they have to reinflate. And so because they're reinflating, this is the bull. This is what's going to create the next bull wave in Bitcoin. And he says this is the first time we've gotten this signal in, 2 years? Yeah, since November of 2023. So that's, it's not November 2023, that's less than a year ago, right? Okay, so it was about 8 months ago. And let's go look at his website, or here's where the article, there is his Twitter or X account, and this is his study. I thought it was pretty good. I think he makes a pretty good case, and he calls it his global liquidity momentum model. And I'm not sure exactly how. It looks like every time that you have 3 greens down all these 3 cycles, and it turns up. So he's making a very strong. This is really not technical analysis. I would consider it more fundamental analysis. And fundamentals are slower to kick in than technical. Technical is basically for short-term and timing. And things like this, they're not timing indicators, but they're trend indicators. In other words, he's saying, basically he's screaming, this dip needs to be bought. That's what he's saying here, to make it simple. And let's see what the other one that I wanted to showcase. I found this guy. Does he have a Twitter? Did you put his Twitter page on here?
Yeah.
Okay. This is called the crypto simulator. He calls it the loss cycle. And it's pretty long. It's about 45 minutes. We're not going to watch it here, but I wanted to reference it here because what he does a legitimate study of triple tops. And this is a legitimate bearish case for Bitcoin. Again, I'm not predicting anything here. What I'm trying to do is show you the risks, to show you I'm very bullish on Bitcoin, but I also understand the risk. I have not discounted that Bitcoin can drop below 40,000. That's still in the cards. I thought I took it off the table when we went above the 2-week high, but when we broke down, I really be very surprised if we go down there, but it's there. And so you just can't ignore it. And I thought this guy did a pretty good study. Is this his Twitter right here? Where's his Twitter? There one? No, that's Jamie Coates. All right. He's got a, you need to look up. And yeah, just this guy here. Maybe. Okay, is this Twitter on here? All right. There it is. Well, we can look him up later and put him in the show notes. Okay. Anyway, I thought
Very
this was
top is
good.
quite high.
Well, we're not going to listen to it now, but I was listening to it, and I thought he did a very fair job. He's a very humble guy. He is not making the outrageous predictions. What he's doing is showing what a triple top is and how it is, it can be a very bearish indicator. And so I thought that was worthwhile pursuing. And he called it the lost cycle, and we are. I mean, it is possible. That's the whole idea. Cycles are great until they don't cycle. It's just like seasonal moves are great until they do a contra-seasonal move. So these are things that as a trader you always want to pay attention to. Okay, so let's go look at these markets. And I don't want to look at that. Okay, let's go look at Bitcoin first. All right, guys. Big down day, which doesn't surprise me. Again, guys, we look at this weekly chart. What did I say? If you take up the previous week's high, you sell it. We didn't even get there, but this thing's having trouble going anywhere. You've got a very large, a nice down day today. Again, when we took out this 2-week low right in here, when we took out this 60,654, that tells me we got problems. And of course we did. We had a huge gap down. We filled that gap. And let's go look at the, this is the Chicago Merc, and it's a different market, but it's doing the same things. And now you had this huge 3-week gap. You gap down through it with a $5,000 move overnight that you couldn't trade it on the Merc, or you could trade it in other markets. And then you went up and filled that gap, and now we're headed back down. Now we're going to go down here, and could we hold it down here, or can we go all the way down below? Again, I'm going to outline the worst case scenario, and the worst case scenario is we go down here and take out this low. The January low, which is 38,500, and that's the worst case scenario. And if it does that, it will be extremely bullish in my estimation. Now, the reason I want to point this out is we have this Jamie. We have this Jamie Coates. He says we're already here, and he could be right. So I said there's analysis is a art, not a science. Okay, most people look at TA first, and you have that reversed. And number one thing you want to look at is money management. You need to manage your funds, and then the number two thing you want to look at is your fundamentals. The last thing you look at is technical analysis. And most people get that reverse. They focus on the TA because it's the easiest. It's for timing. It's what gets your adrenaline going. The fundamentals are, kind of like watching paint dry. It's like, a fundamental is commitment of traders. A fundamental is backwardization. The market goes into backwardization. Fundamentally, that's bullish. Now, it doesn't mean it's going to go up right away, but it tells you the market trend. There were all kinds of problems with this market at 70,000, and that's why I was not bullish. I said there's all kinds of problems with this market. Some of them are biggest thing that's been resolved is we've had a price drop. But the other thing we have is you had this strong seasonal where you make a bottom between August and September. And the other problem you have is the basis. Now, this basis is getting corrected too. This basis is just kind of way too high, and the basis is the difference between the futures and the spot market. And when you're in a contango, that's the normal place Bitcoin should be. But when that contango gets to be high, then it really becomes you're at a disadvantage. The longs are at a disadvantage because you're paying a huge premium, a huge time premium to buy Bitcoin. Okay, so let's see what else. I want to look at we'll look at the gold market, and this is amazing. I looked at it earlier. Look at this, guys. Oops, this needs to be up. Oh, this is weekly, daily. Okay. Gold is up while Bitcoin is down. This trend has been consistent, and it will. I think it's going to continue. So let's go look. This is your. Well, that's 30 minutes. Let's go. Here's your daily. You can see we had what we call an outside day yesterday, where you had a higher high and a lower low, and you closed lower. Now, a lot of people think that's bearish. I'm contrarian. I always think it's bullish. When you have a day like this, I'm a buyer, and you did trade lower, so I would have been a buyer, and it's gone up basically all day. I don't see the gold market breaking. Any kind of dip like this can be bought. I think you're making a major low in gold right now, and I say that unequivocally. And I'll go through and we'll look at this again long term. You'll see we already know the fundamentals, but here is the chart pattern on it. The reason I say that is we have this huge cup and handle. I'm sorry. Let's go back here. This huge cup and handle that starts here back in 2011. After the 2008 financial crisis, we spiked up to about where we are now, 1900, and then we just went down to as low as about 1,000, and we've been trading in this range. We traded in this range for 10 years, basically, and then another 3 years we put this handle on it, and then we went up, and we've been going up, and we're accelerating now. I do look for a 10x move from Bitcoin, from this 1,800. I think 20,000 gold is definitely in the cards. The stock market, boom. Oh, it's amazing me. This kind of surprises me. The stock market has continued to recover. So apparently it still hasn't taken out this 2-week high, but boy, it has come close. So I am kind of surprised. I'm surprised that you see the strength of the stock market over Bitcoin, but that's what it is. And I'm still not super bullish on this because it really hasn't gone anywhere. From where it started, the break. Well, all it's done is recovered, from this peak. So we shall see what happens. When the bear markets tend to happen in the stock market during October, which now is approaching. So we can hang up here for 6 to 8 weeks and then take it down. So anyway, that's where we are there, and I think I am done. All right, guys. Hey, if you like the way I'm doing this, and I'm covering the news every day, please support my work, and you can do that by getting an equity trading start kit. Again, it's $290. You'll get a Jade wallet. You get both of my books, signed copies. We'll send you we'll send you a bunch of stuff. You won't get everything in the picture here, but you'll get a lot of it. You'll get all the books, and we got a comic book that's not in there. At any rate, that's how you can support my work. Also have a boot camp, and if you want to sign up for that, please read this article before you sign up for it, and then you can just book a call with me, and I'll interview you and see if you're right for the program. Again, the boot camp is if you're a trader, and if you've consistently been losing in the market, like year after year, you are a loser in the market. That can be corrected. It's not what you think. It's never your analytical skills. It's in almost every case, it's your money management skills. and money management is something that's very easy to understand, but it's very difficult to execute. And in fact, in my personal life, I failed. And not in my trading. My trading, I did well, but you know, my lovely wife decided last August, a year ago, that she didn't want to be my wife anymore, or the mother to my daughter. And you know, that broke a big trust. And unfortunately, I've got to, you know, take actions now to try and get my assets back. And that was poor money management on my part. You know, I don't regret it because, you know, as a man, I take responsibility for my failures, and I think I did fail her as a husband. So I'm working on those things too. All right, well, I'm done. I kind of talk about that stuff and the things I write about. I try not to have any, you know, hidden secrets. That's part of what I'm reconciling with accountability. I don't think trading is that difficult, but I do think that managing funds is probably difficult for all of us, and in different ways. All right, well, we'll see you tomorrow. Oh, maybe not tomorrow. Today's Thursday. All right. Yeah. So Monday, I'll see you on Monday, and we might do some special weekend shows too, but that's still on the cards. I'm still working on exactly coming back and how I want to do this. I'm getting comfortable doing the daily news. So if you like this time slot, please subscribe to the channel, support us in any way that you can, and I would appreciate that. All right, have a good weekend. We'll see you Monday.